All right, ladies and gentlemen, good afternoon. Good afternoon, good afternoon, good afternoon. This is the TDM Academy. We are live at the moment. This is a midday report, midday trading room. I'm Ashley Reeve, and it is wonderful to be with all of you guys here. Yeah. I see you there, Tanya. I see you there, AV Trader. Chile Gauteng, I totally agree. Let's get started, guys. You know the drill. You know the drill. Before we do that, in this video, guys, there will be a lot of opinions, price ranges, support and resistance levels of demand, and people taking entries here and there and so forth. But remember, it's all opinion. Please do not construe that as advice in any way. All right, I see Shirley Shakes. Good afternoon. Good afternoon. Good afternoon. Let's wait for some of the slow pokes to come online. The lovely Tandy. Good afternoon. It's good to be with you. It's the midday drive. All right. All the links are in the chat facility, guys. All is good. All is good. All is good. Maybe on your side there, maybe just check it out as well there, Tanya. I'm all up here on my side. Okay. I'm all up on my side. Just check on your side there. All right. I'm all up. I'm all up. I'm all up. I'm all up. Good morning, Sia. Good morning, Sia. Good morning, Sia. Good morning. I'm all up on my side here, Tanya. All right. Guys, are you guys ready to go? Are you guys ready to go? Are you ready to go? Are you ready to go? I am ready to go. I know you guys had a fantastic time with tea this morning at 9:30. All right, ready. There we go. So, interesting week. I would like to put forth first, interesting week here. We've obviously come to the end of another trading week, but let's look at what happened in the markets. And I know T has really gone over some great stuff as well. I'll just be adding and connecting to that. And then we can obviously start looking at what to expect into, going into next week. This week was driven mainly, as we know now, by geopolitical tensions, guys. The ongoing conflict between the U.S. and Iran created a lot of volatility across the oil, across currencies, across commodities, and obviously the stock market. Brett, I see you there as well. Good morning. And so let's go and look at some of it, guys. I thoroughly enjoyed the yen yesterday. I don't know about you guys, but I thoroughly enjoyed the yen. I did. And we're going to get into some of that because you guys by now should know we were tracking the yen for quite a bit of time. And it actually really played out phenomenally. All right. So let's maybe start this one off with the oil price. Let's just start this off with the oil price. Let me give some of the slow pokes a bit of a chance there. Is everybody with me? Is everybody tracking? Is everybody here? I'm going to give you a couple of seconds real quickly, guys. Tell me if you're with me. All right. All right. Okay. All right. I see it. Now, guys, the oil price was one of the biggest stories this week. All right. Earlier in the week, we saw crude oil surged more than 6%. All right. Let's maybe start over there. Why? A lot of traders feared the supply disruptions after that fresh military action between the two countries, and concerns grew, as you guys know, that the strait will, one of the world's busiest oil shipping routes, could be disrupted. We are not strangers to that, okay? But by the end of the week here now, however, the market calmed down. More oil tankers successfully moved through the strait, and this eased the supply immediately, or at least the fears, and oil pulled back. All right, it pulled back. Now, that's important for us, guys. That's important for us, okay? Because here we're seeing price at the beginning of the week. So it's Friday, Thursday, Wednesday, Tuesday, Monday. Are we together? I'll say it again. This is today. It's an hour frame. Friday, Thursday, Wednesday, Tuesday, Monday. All right. So we see Tuesday surges from Tuesday, pushes all the way up there. And by the end of the week, we pull back. Now, we were 1,000% correct in terms of above 84, it goes to 88. And you can clearly see it there now. So remember, I said to you guys many times that we will leave a lot of the analysis on so that we can track it back later on. All right. So we can see that price has moved up from the 84 to the 88, and that's important. All right. It's pulling back. So we're going to deal with some of the movements that we possibly can as we go along. We're just doing a bit of a review quickly here. Then we had the US dollar and the Japanese yen. Now, I actually took this off. We had initially spoken about the resistance that we see, the USD JPY, and it's going deeper into that resistance. And there is the explosion that we were waiting for. Now, I don't know about you guys, if you guys were following with me here, but all the yen pairs, all of them had pushed down. If Teodo's here, he'll tell you about the CAD JPY as well, all of them. Now, it stole the spotlight, all right? The yen strengthened sharply. We know that, the markets obviously suspected that the Japanese authorities have stepped into the market to support their currency. At the same time, the Bank of Japan also kept the interest rates unchanged, but we know, it maintained that inflation does remain above the target. And so this helped weaken the dollar, allowing currencies such as the Australian and the New Zealand dollar to strengthen throughout the week. And again, I come and I say to you, these currencies take chances, guys. The dollar cannot be strengthening all the time. There has to be a balance. So at some point, we're going to have to get a weakness. But what's important to understand about that balance is that it consistently produces the buyers and the buyers and the sellers. And secondly, it creates market structure. So there has to be balance. Are we together there? AV Trader, I got yen phobia for now. Listen, this was a beautiful move. Now watch how this thing just totally demolished through the CAD as well. There's the drop. We had the drop, guys, right there between 115 and 114. Obviously, it went a little bit lower. When I say a little bit, I'm understating that, all right? Now, the reason why we did not catch this entire move, why I stopped at 114 there was simply, guys, because remember, we're looking at it from an hour down. So all these pairs that you're going to see now was an hour down. It was moving in fractions, all right? I was not looking at higher time frames. If I looked at the 12 or the 8 or so forth, we most probably would have caught this entire move. But we looked at it from an hour down. So our targets were more narrow rather than wide. So there's the CAD JPY. Look at the NZD JPY. Absolutely smashed the area 93.226, which we had chatted about here. The Euro JPY did exactly the same thing. Went to the 184 right there, below the 186. The CHF JPY smashed through all the way right there, 196. Look at that, guys. The AUD JPY smashed all the way down to 112. Look at that, below 113, all the way down to 112. The GBP yen smashed through to 18.137, all the way to 215. So, guys, everything came and worked out as anticipated, based on the government intervention and the suspicion that the authorities have obviously intervened. Now, what's important to understand is that, guys, we are looking at the charts in fractions of the movement. We cannot predict, all right, necessarily to the T that this move is going to happen on the long term or over the long term. These are all daily movements, weekly movements, and monthly movements, all right? but we see on an annual basis that certain patterns always come to the surface. So you can always use that as a benchmark, all right, a barometer for you to make a more informed decision, all right, which we can then understand why gold also moved the way it did. We know that it did experience a bit of a mixed week here, guys. At first, investors obviously bought gold as the safe haven, asset because of the Middle East conflict. And later in the week, though some of those gains faded right away, because we know that the markets continued pricing in the possibility of another US interest rate hike in September. So if we look at it, we see Friday, Thursday, Wednesday, Tuesday, Monday. We saw here, guys, it really came down because of the dollar influence. And by the end of the week, look at that, we pushed. So that's important for us to actually engage with. But what's also important is that we said above the 4043 area, we anticipated to go to the 4093. And guys, by the end of the week, after we saw the divergence, we smashed up to the 4093. So in short here, guys, geopolitical tensions did support the gold. And while expectations, of that higher interest rates came in, it's still limiting the upside. Why? Because with a higher yield, we have more money going into the dollar because of the interest rate that comes back. And so people make some cash there, and it's limiting the uptick of the gold at this point in time. So let's check what could possibly happen for the week that is to come with gold. So I'm going to start it off fresh, and I'm going to use a bit of a higher time frame over here to look at it. All right. So here we have gold on a daily frame, guys. This is a daily frame here. All right. Now on the daily frame, you can see that we have a support level here. The only way we go down is if it breaks that specific zone, guys. If it breaks that zone, it's a different story, okay? So right now, this is where we at, all right? So from a gold perspective, as I push out, look at this now. This is what we could possibly expect if gold continues to do what it's doing. Watch very carefully. I'm not even trying to trade all the way up there. I'm trying to stay right here, all right? So I'm using a higher time frame. Yes, I am, but I'm using the most recent structure over here. That's what I'm using, all right? The most recent structure. So let me quickly show you what could possibly happen here if we break through certain barriers. So let's use this one right here. And with that, I'm going to drop down now. So I'm only using this area here. So I'm going to drop down now, and we are going to see what could possibly happen. I'm dropping down. All right. So this is very interesting. So here we have a zone that we should be looking out for, guys. Right here. Right here. Hold on. See this area here? 4060. And then if that happens, and you can even check this out right now, okay, as you go about your business today, there is a high probability that we could be pushing up to the zone. So let's look at it. I'm not trying to go too far up. You can see where price is right now. If we come and we push up again above this area here, 4166, the only other zone that we are dealing with when it comes to the gold price is this one here. Right there and right there. We are literally in the middle now. For gold. All right, that's going to be very important for us. So 4060, if we break and we push above here once again, all right, because price is now pulling back. So on the lower time frames, we need a blue impulse move to be pushing up above 4060. 4060.49. If it does that, there's a higher probability that we push up to 4166. If not, remember, we're dealing with the foot of these impulses here. That's a foot This is a foot. This is a foot down here. So if we come down and we start breaking below these areas, that's the next area we then go to when it comes to gold. That's a very important point there. All right. We also have, and we cannot omit the NAS 100, guys. So there was no commitment on this one. All right. We were actually stuck in this area. I don't know if you guys can remember. I hope you do. That there was this zone over here where price just could not commit. It just could not commit. It kept on coming up. So it came down, went up, it came down, it went up, it came down, it went up. It went down again, and only the next day did we commit above. And from there, after the commitment, we flew up to 28,447. I think that's a very important point there, is that without the commitment, it was very, very tough for us to get a specific entry. Now, from there today, you can see we've knocked it. We've also now committed just a little bit above that 28,447. There's a high probability we're first coming down for a pullback. And when we do come back for the pullback, many guys are going to start looking for buys to possibly take it up to 29,000. Now, what we must look at is, despite all the uncertainty that we experience, stock markets are finishing the week strong. All right. The technology stocks actually led the rally after the excellent earnings from Microsoft and Amazon. And this reinforced a lot of the confidence in the AI sector. Remember, the AI sector was the reason why this movement, this sell-off happened over here. So the NASDAQ, the S&P 500, and the Dow Jones all recovered well. All right, that's important. And then we also saw the Asian markets that followed the Wall Street higher today. We know that the semiconductor companies are continuing to outperform, and that's as a result, from the investors that's remaining really positive. They're remaining optimistic about artificial intelligence. So we're seeing that there is a recovery. We're seeing that it's still pushing up. We've now created a very, very powerful impulse to the upside, and now we're waiting for a pullback to come. Now, am I saying a pullback will come? No. Price can push up a little bit further, and then it happens. It's Friday. It can be a little bit unpredictable, so I would obviously tune into the 3 o'clock session so you can see what the New York Open has to offer. All right? That's important. Now, all of this is happening, but we also cannot omit the central banks in this entire narrative, because the Federal Reserve kept those interest rates unchanged this week. That's on Wednesday. So the Fed made it clear that inflation is still a concern. Another rate hike remains possible, and markets are obviously currently pricing in roughly a 63% chance of a rate hike in September. Meanwhile, we know also that the Bank of Japan, they also left their rates unchanged. And although one policymaker voted for another increase, this suggests that Japan obviously could continue tightening that monetary policy later this year. So that goes back to what I'd mentioned to you guys before about them taking chances to hike those rates or to cut those rates, because they have to work together in a very strange way. It may not seem like it always, but they have to work together to bring balance in the global economy. The GBP USD did exactly the same thing. From 1.32960, we smashed above. We went to the 1.33619, and we superseded the level, all right, by 109 or 110 pips. So we were really, really doing well. And again, guys, we didn't catch this move because remember what we're dealing with. We're dealing with intraday trading here. So we can always do another analysis on what could happen over here and what could happen over there. At this point in time, there's a pullback happening, so we can obviously jump in later on to see what's cracking. The Euro USD did exactly the same. You can see here, guys, that we had pushed from the zone. We went up to our area that was demarcated at 1.14173 and superseded that, which is phenomenal, if you ask me. All right. Let's move to the BTC, because I think that's important. We saw that, this week here, guys, particularly that was on Wednesday and on Tuesday. We saw Bitcoin come down a little bit here, but it's managed to push once again above the 64,000. Now I'm already in BTC and I am holding this, and I'm seeing the price still go to the $70,000 per coin. I'm not moving away from that. 70,000, we're still there. It's just really pulling back right now, and there's no valid higher low on the daily frame. We're seeing it happen on the 12-hour, it's on the 8-hour, but I need the daily to actually come through and say, listen, this is now a higher low, so we can start advancing to the upside. All right, the USD Swiss franc smashed. Look at this, from 0.81782 smashed below to the 81,129. Absolutely stunning movement over there, guys. All right, nothing out of the ordinary with that one as well. AUD NZD, guys, something that you should not not look at, because here we see it's actually moving down below the 1.2287. This one, we've been on this one, we've been looking at the divergence, and this could be the same case as the USD JPY. It's just moved deeper and deeper and deeper into the resistance. And because it's moved deeper into the resistance, all right, and it's taking so long to do that, guys, please understand, it's taking very long. We're anticipating a very aggressive move on the AUD and ZD. That's a very important one that I'm mentioning, because this can apply to many other assets, guys. If you see it's taking a bit of time, like it did with the USD JPY, and it keeps on moving back into that area, and it's going deeper or it's going lower into a support, expect a lot of movement there. All right, the Euro NZD, guys, this one, it's really taking its time. We're seeing a lot of divergence to go to the upside. This becomes a beautiful trade for some of the guys that's looking at it on an hour and down time frame basis. So let's quickly look at this one here. I'd really like to dig into this one. The hourly frame, you can see that price is, looks like we still could be pushing, down. So let's quickly do some work on the 1 hour here with the Euro NZD. All right, the Euro NZD. You can see right here, there's a lot of divergence that's occurred here, guys, a lot of divergence. All right, and so we want to try and see, we're not trying to trade this entire movement to the upside. We are only trying to trade, let me actually get my rectangle here. We're possibly trying to trade this area here. That's it. That's all we're trying to trade. So I'm going to go down to a much shorter time frame, and you guys can check this out for the day. Whilst we're here, let's go to the 15-minute, and you can see right here, hold on, 15-minute. It's taking its own time, guys. The 15 minutes taking its own time. We've recovered, and we've recovered well, but there's a lot of fight in this one. But I'm seeing it, guys. I'm seeing this good movement here to the upside. All right, so 15 or 10-minute on the Euro NZD, and let's quickly have a look on where we could get some good movement here. There we go. Right here. Look at this. It's taking its time, but 1.966, and I want you to watch this out. This is going to be a risky one, but at the end of the day, from a risk perspective, guys, you've just got to do your risk and reward ratio calculation. It will be a phenomenal one to add to the list. All right, if you're really interested, we have the 50 mark right here, and at this point in time, guys, on a 10-minute and even a 15-minute frame, what we need now is for the impulse to the upside. We need it to start moving above. Let me just get it. We need it to start moving above and close above this area here, right there. Let me make this blue so you guys can see. We need the blue impulse Remember that we have the blue leg. We need the blue leg to start closing above this area over here. And I think that's a pretty important point that I'm mentioning, okay? So look at this. We need the blue impulse wave to close above that area. If we can get a blue impulse wave that closes above that area, it's going to be phenomenal for us. The 15-minute has the red one, but we need the blue one. The moment the blue starts pulling up and you can see it, that is a fantastic sign for us that price is now possibly ready to push up to the 1.96676. And that is about a 83, between 80 and 83 pip move. Phenomenal move here, guys. Phenomenal move here. The Euro NZD. Guys, let's not be fazed by when you see these lows here, because many guys are putting the stop losses here. They're putting the stop losses there. And I think we have been over the stop loss concept before. But if you're here for the first time, remember that this cells, or the cells that have come down here, they've put their stop losses. There's stop losses here. There's stop losses here. There's even stop losses here. So if price comes up now, it will take all of them up. It will take all of them out. I think that's a very important point for you guys to know. All right. Very important point. Stop losses, stop losses, stop losses, pending orders, all of them. There's some pending orders here, and then they've placed their stop losses there. All right. And we're looking at this from a 15-minute perspective. So let's not be fooled by the extension. Let's not be moved by the extension. The only way we really cannot, trade here, guys, is if price, really aggressively moves all the way down to the 1.94. And even so, if it does move down to that area, it just means that we're going to have a much bigger area, or a much wider distance, not of 80 pips now. Now we can go to 200 pips. That's a beautiful move to the upside. So at this point in time, this is the only limit here. It's the only limit right there. That's the only limit. If it has to break there, there's no way for me personally to stay in this. Look at that. Because then it means we have now exhausted this entire support, and price then goes down even further. I would not be in this trade if that is the case. So that's my limit right there at 194. It's at 195 now. It's at 195 now. 194 is my limit, and that is about it. All right, that's the Euro NZD. And then the GBP AUD. I know T chatted about the GBP AUD. He was absolutely spot on. Him and I, we agree on this, that the short there looks phenomenal, even although there's a lot of divergence there. All right, if you go to the higher time frames, that is what I'm currently seeing here. In as much as the lower time frames is showing divergence. Divergence just means that there could be another move that could maybe come up, because this move actually happened already. Do you see that zone there? And that zone is indicative of that area. And so with that being said, the move happened. All right, the move happened. And so when you go to the higher time frames, there's more divergence to the downside. Now, guys, I must also say this. What you need to do when it comes to divergence, okay? Don't be surprised. Don't be surprised when price extends after you see the divergence. I have to say that again. Many guys will see the divergence, and then they'll see price go down again. That is part of divergence. The divergence is supposed to do that, because when it does that, it confirms and affirms that it's divergence. So when you see the extension, don't panic about it, because that is the job of divergence. It's supposed to extend. It's supposed to, and I'll say in inverted commas, it's supposed to trick you. It's supposed to trick you so that you think, just like the Euro NZD. If I go to this here, you see divergence. and then you see the extension. So the divergence has come to prove that it is divergence. So there is the extension. And here you see price. Look at that. It's supposed to. Brett, it's supposed to. Tanya, Sia, Shirley, it's supposed to. AV Trader, it's supposed to trick you. That's the whole point. If you're not tricked, I'll say that again. If you're not tricked or you're not confused, then there's a challenge, because things can't be easy come, easy go. So it's supposed to trick you so that you can have a more or make a more informed decision. All right. So if Euro NZD is pushing up, let's look what Euro CHF is doing, because it could also be a zone for us. Now remember, we saw divergence on the lower time frames, and let's see if there's anything over here. All right, with this one here, it looks a little bit different. This one could be mimicking the Euro USD. That's what I'm seeing. Now I want you to pay attention to what I'm about to do, guys. I am not trying to trade it all the way down here. Okay, all I'm trying to do is trade this. I'm only trying to trade that. Remember, we're doing intraday trading, right? I'm only trying to trade that area over there. That's it. I'm not trying to take it all the way down. That's important. That's important, all right? So I'm going to do that on a lower time frame now. That's my area. I've highlighted it. And I'm going to go down to a lower time frame now. That's it, right there. There we go. That's what I want to do. I'm only trying to trade it down till there. So you can see here now that price from this area to that area, that entire move, we've already went 50%. We've already moved 50%. So 50% of the move is gone. But there's another 50%. So what's happening after it's hit the 50, it's now pulling back. It's now pulling back, okay? In fact, guys, this trade is already ripe. Where I suspect it to linger around here, and that's the challenge when you are trading your minor pairs, guys, or your crosses. Sometimes they can take a little bit longer, all right, to materialize. So we're at 0.93. Guys, I can tell you today there's shorts happening right now. Right now. There's a lot of shorts happening right now. Okay? So I suspect it to linger around here. There is even, let me actually extend this a little bit. We could be, let me just extend it. We could be, just watch this area very carefully. I would also, yeah, watch this area very closely. That zone. All right. So look at that there. Whew, this is good to go, man. It's actually good to go. That Euro NZD, guys, look how it keeps on. Let me just go to the 5 minute. See how it comes down every time. Lots of divergence here. The Euro CHF is more like the Euro USD. It's more like the Euro USD. Let's go and check out the Euro quickly. Euro USD. Yeah. Euro CHF is more like the Euro USD. It's looking a little bit more like that. The Euro NZD is at a low. It's already at a low. The Euro CHF is at a high. All right. The Euro CHF is at a high and the Euro NZD is at a low. So that's why I am buying this one here. Euro CHF, there's already, oh man, from there to there. This is a beautiful trade, man. Look at that. Look at that. And the divergence, let me just see this divergence here. Man, look at this, guys. Guys, you have to appreciate trading divergence, guys. Guys, there's this thing when it comes to the market, right? The fundamentals. Let's look at it from an economist perspective. Someone that is really studying the numbers. They can do a lot of projecting in the next couple of months, years, and so forth. That is a really credible individual because they paint a picture. They do about what could happen to that currency, to that commodity, etc. There's a place and a time for that. There's a place and a time for that. All right. However, then you get the other side where you get some guys that, they may not read too much into the fundamentals, which I understand where the conflict comes in, why there's tension, because some economists or guys that are really into studying the politics and the economics and they do the numbers and do the calculations, I can understand where the conflict comes in. However, guys, there is a time and a place and a role for many people to fulfill. So the economist or the person that's really into the numbers, they can give you projections based on what they have seen and the data that they have collected. So they're going to give you a response on that. Nothing wrong with that. But you also get the guys that can right now, it's 12:37 at this point. What do we anticipate Euro CHF to do? Do you guys see that? So if you're calculating what has happened to the Swiss economy over the past 6 months or 1 year or 2 years, you can give a response as to what you think the Swissy is going to do against the euro. But then the technical aspect for the guys that would like to get into the market right now, you need to understand this. And that's where divergence, that's where the indicators or at least the tools come in. All right, that's important. K1, which zigzag do you use? It's on the MT5. Just go to the MT5, go to custom, you'll find it over there. It's right at the bottom. It says zigzag color. All right. Brett explained the correlation and CHF this morning. All right, got you. All right. So right now we are at a very interesting place because we have the impulse and we have the pullback. All right, that's the first low. There's the pullback happening. Now, inside of that, there are obviously moves as well. There's obviously moves as well, and you're going to find them on the lower time frame. There's one already. Let's see how many. There's one, there's two. See there, 1, 2, 3, 4. So many of the impulses, pullback, impulse, pull, impulse, pull, impulse, pull, impulse. They look how close they are together. So they're not moving far away. All right, they're not moving far away. When you start seeing impulses move far away from each other, you know that there's a lot of Vuma still in this specific pullback over there. That's important. All right. So what we're seeing is that this could just be a dramatic move that is trying to get away from that. It's almost like, I think the guys said it earlier on in was it in the week or it was last week, kicking an old dying horse or something like that. There was an expression that the guys used. I can't remember exactly, so please don't quote me verbatim. All right, but this could just be the last straw, the last movement of this pullback before we start pushing to the downside. Now, again, look at the fib. If you take it from there to there, price is at the 38. So this dying horse here to reach the 50 and the 61 can be done as the last movement, and then we push. Or it could not go up, till there at all. Because if we get the next impulse that comes and breaks all these areas over here, taken out all those feet there, 1, 2, 3, 4. If it takes it out, there's a higher probability and commitment that we are now pushing to the downside. So that's important. All right, Kevin, you're most welcome. All right. So check this Euro Swissy out, guys. Check it out. We are now pulling back, and it seems like there is some good movement here that's going to come down. to the 0,9. Hold on, let me just write it there. So you guys, if you guys are interested in this one here, 0.92245. 0.92245. All right, so let's see how far it actually goes up there before we do anything. All right, and then obviously here, guys, this Euro CHF, Euro NZD is really just moving at that specific zone. All right, I wanted to also do the USD JPY here and maybe just look at it. All right, so remember we had that massive push to the downside that has come because of the divergence. Now remember what we're going to be looking at is, because this move is done, so now we're looking at, do we go further up or do we come down? And I think that's a very important one. So let's quickly look at that specific area. Look at that. So we've come down. This is a higher low. That's a higher low. All right, if I go to a much higher time frame, let's go to 12 and a daily. Yeah, this one is still, wow, this one is still coming down. So there may be some further downside here, correction happening, and there could be some further downside here. Let's see. But it's not there yet. It's not there yet. It's a higher low, right? So let's look. All right, so here we go. Very choppy. See, we've reached the 50. See that? We've reached the 50. So there is a definite, I'll show you now, this area here. This area is a zone for correcting right there. After we're done, if it continues to do this, 152. 152. Ooh, because we are already, yeah, we are already, guys, this, but please expect a lot of choppiness here. So the correction is happening back into these zones over here, but expect it to be pretty choppy, okay? Meaning it can move and consolidate for some time. And the reason why I'm saying that, guys, because every time you get a very aggressive move like this, then you tend to see consolidation kick in. All right, you tend to see consolidation kick in, so anticipating price to go up back to these highs over here. The correction is actually taking place now. So we anticipated to possibly go up till there, but over some time, you know, we anticipate price to go down further because there might be some more intervention coming. So 152. All right. So let's wait and see. Let's see the correction. Let's see the correction. And then from there, we may just come down further here. Let me actually do this, guys. So if I do that and I go to a higher time frame, you can see what we're working with. So that's what I'm anticipating. All right. After it has corrected. So there's a lot of profit taking that has happened. Even on the weekly there, that's the area. Look at that. 152. Guys, if this thing goes down even further, I mean, that's a totally different story. Look at that. Lots of divergence. I'm not saying it can't, but 152 for now. 152. That's on the much higher time frames. You see that? 152. And you can see we're still within the impulse. There's the leg. There's the head. There's the leg. There's the head. And so we're just moving a little bit away from the head now. And you're seeing that happen on the lower time frames, guys. That's important for us to note about the USD JPY. And you can go and check this out on all the other yen pairs as well. And see if you're getting something similar here, because generally you're going to find that, on one of the other pairs, it may not look exactly like this, but it could also be moving to the upside. If you just take NZD-JPY, for example, there it is there. Look at that. So we've also moved up till there. The euro, look at that, same thing. This one looks, yeah. So all of them on the 4-hour have not created the lower high yet. That is an opportunity, just so you do know. Because there's no lower high yet, that is good for us. Because once the lower high is created, which you can see on the 1-hour only. Oh, wow, this is beautiful. All of them looks like it has it. All of them. The 3 hours not done it. It's only the 1 hour. There we go. So all of them have similar behavior. Guys, this is a beautiful, beautiful, beautiful opportunity, especially coming next week. The JPY. Phenomenal opportunities here with the JPY. So let's see how it goes. But at least for the week, guys, what to watch out for next week, all right? It's likely to remain volatile next week, guys, all right? Keep your eyes on any new developments between the US and Iran. Look out for the headlines this weekend. We must also keep our eyes on the oil prices and the activity through the Strait. Keep your eyes on the strength or the weakness of the dollar. Keep your eyes, or at least continue to keep your eyes on those corporate earnings. Any comments from the Federal Reserve, all right? Or Federal Reserve officials, I beg your pardon. And then obviously, any further intervention by Japanese authorities, keep your eyes on that. Because if the tension in the Middle East escalate, expect the oil and the gold to remain supported, while those stock markets obviously face a bit of pressure. And if the tensions begin to ease, guys, all right, then traders will likely shift their attention back to the economic data, the inflation, and obviously the interest rates. Because right now, the major driver was the oil price that had been pushing up and down, all right? So just make sure that you check that out, guys. It's looking good so far. I can't see anything at this point. The moves happened. What happened needed to happen, but there's a lot of corrections that is taking place now, especially after the yen. So also don't forget that Euro NZD, and watch the Euro CHF as well. All right, look at that Euro NZD now on that low. If we get a move to the upside, it's not come yet. Look, the blue one is starting on the 2. It's not at the 3. And then keep your eye on the Euro CHF as well. All right, guys, I think that's it from me for the midday report, the midday, trading room. A quick revision there to see where we are on the Friday. But have a lekker weekend. Have a fantastic weekend, guys. You guys were great, as always. All right, be safe. And obviously, we will move further as we do go along. All right, if there's any questions, you can put them through. Please, can you type them? It would be good, guys. And then make sure you keep your eye on that gold as well. All right, make sure you keep your eye on that gold. You're welcome, Shirley Shakes. You're welcome. Caroline, yes, go for it. I'm just waiting for your question. Let's see this Euro NZD goes. Caroline, yep. You're welcome, Brett. You're welcome. Caroline, I'm just waiting for you. AV Trader, I see you there. You're most welcome. Caroline. It's very difficult for me to interpret that, as a line pops up saying maybe buy, open one. Okay, so from what I'm seeing there, okay, it's possible that you may not have enough margin. So I'm trying to interpret with that data. Are you brand new, Caroline, to trading? Quickly, just let me know. Are you brand new to trading? Quickly put it in the chat facility there. Are you brand new? It could be a margin issue. All right. Could be. We'd have to investigate. All right. There we go. Okay. Please, will you contact care@tdmarkets.com? It's in the chat facility. We will need you to obviously go through some of the basics. There is an ebook that you can also download, guys. You can visit the Academy page. It's right there. All right. The link is on top there, guys. There's an ebook you can download over there. There's a small assignment that you can also complete. And then obviously what you then do, Caroline, once you're done with the test, and that goes for everybody, you will receive an email with the Zoom private sessions. And that will be for you only, guys. It's, for your email address from your trading account. If you're brand new and you don't have a trading account, you'll first be prompted to open one. But if you're already a client, you're already a student, just complete the test. And then you will definitely, once you've completed that, you'll get an email from our support team that gives you access to the Zoom private class. It's not public. The Zoom sessions are private, guys. They're for all our students. That is obviously in the community. From a learning perspective, remember the Academy is the educational side here, guys. So those Zoom sessions also run Monday to Friday. It's a new phase that we have kicked in with the Academy. The trading rooms are public. It's for everybody 4 times a day, but those Zoom sessions are exclusively for the guys that complete those assignments. So just visit the TDM Academy page, site. You can download the ebooks and you can do the assessment and the support team. Once you've completed that, there's about 10 questions or so. You'll then get access to the Zoom classes. All right. But we look forward to having you in those Zoom sessions. It will be great, and it's going to help you when you are in the trading room. All right. All right, there we go. The lovely Tandy put it there for you as well. All right. All right, familia. Have a fantastic weekend. Have a good weekend. Have a good weekend. You guys were fantastic. And we'll see you guys next week. I'll see you next week. All right. Ciao, ciao for now. Bye-bye.